Business Nigeria. As Nigeria's central bank prepares for the crucial November Monetary Policy Committee meeting, all eyes are on the indicators shaping the country's economic direction. With inflation still elevated, exchange rate pressures lingering, and global financial conditions tightening, the stakes have never been higher. Today, we explore the projections, the key issues on the table, and what policymakers are likely to consider as they weigh the next steps for interest rates, liquidity, and economic stability. I have with me an investment analyst and economic development expert, Ogbonna Okuku, to help break down all of the expectations, market reactions, and the potential implications for households, businesses, and investors. Thank you so much for joining us at this time.
All right, thank you so much for having me.
All right, so what, in your view, are the most critical economic signals the MPC will be watching closely going into November meeting?
First, I mean, for me, they're going to consider, the last MPC meeting, the reduction that have started happening in the interest rate reduction. So there'll be a lot of data-driven monitoring to see how effective it has been and what it has done to the economy. Number two, the cash reserve ratio, which was increased to 45%, and then the new cash reserve ratio on the non-TSA public sector deposits. So I mean that's also geared towards mopping up liquidity from excess liquidity in the economy. So that would be there will be a deliberate watch on the effect of that. Then again, the target will also be to look at the effect, of the interventions, the strategic interventions that the central bank has actually carried out when in regards to the foreign exchange market stability. So that would be some of the things that the bank will be looking at, because I mean that meeting would actually consider a few more things, like looking at well, entering into a festive season, and this festive season would mean that there'll be a lot of buying, and those also would have some effect as regards the liquidity in the system, and then trying to also look at inflation. So some of these things are, and again, they have to also going to look at diaspora inflows that will come, because when it comes towards the end of the year like this, you see a lot of returnees, and then people also trying to support their family members back home, those who are not coming back. So that would be also looked at. So generally speaking, so there'll be a lot on their plate to look at, but one thing is sure, that it has to be data driven, because considering that those new interventions or new policies came into play, so there has to be a lot of monitoring to make sure that to see the effects, whether they are positive or negative.
All right, so with inflation still declining now, do you expect the committee to maintain its tightening stance, or is there room for pause or rates in interest rate hikes? Okay,
so now they've started easing, and then but it's just been they're a bit cautious, in their easing strategy. But that's also important. Like I said, if you are considering looking at the kind of spending that will occur this December, we're considering the festive season, I would say that we should maintain the rates as it is now. That's my prediction, that the bank will maintain its rate as it is now, to see after the festive season. Then we can now know how to see the effect, especially the new cash reserve ratio on non-TSA deposits, public sector deposits. So to see the effect, if he has actually, because I mean, from the last MPC to now, I mean, that's not enough time to actually see how good or bad that policy is. But so if you give it some more time, from now to the next MPC, that would also help you monitor the effect of that particular policy direction.
So Nigeria's growth momentum remains fragile. How can the MPC balance the need to tame inflation without stifling economic expansion?
Now, this is what I've always said. Most of the time when you're tightening, and again trying to, increase your cash reserve ratio, you're doing that because The effect will also be a lot of crowding out the private sector players, because there will be less resources or less monies to lend to the private sector. But what you do in this kind of situation is you activate your development finance institutions or strategy, because so you have to now design what I call a strategic lending structure. So that engineering helps you to lend specifically to those sectors that will aid in support productivity, that will help stabilize the economy, and then those that will help you grow the economy, generally speaking. So having that at the back of your mind. So if that is activated, it will help cushion the effect of physical discipline, which is being pursued in as much as we've not been able to get it all well done. But there's still need for that physical discipline. So on the monetary policy end, there has to be a strategic creation of a financial engineering strategy that will support productivity. So that will help a whole lot.
Okay, I like your optimism in all of this, but there are many that will not support your motion. But how will the recent improvement in the FX market influence the committee's decision, especially regarding liquidity and rates direction?
No, because they are looking at if you're looking at environmental, things that are global influence. Now, if you look at things that have to do with other countries, like the Federal Reserve Bank of the U.S. and then other big economies, what they are doing right now, so they are easing. So when they ease, that means that there will be a lot of liquidity in the hands of investors to either want to play outside their own environment. And Nigeria has become a good place for people, especially in the portfolio investment space. Now, again, that stability that has been provided by the central bank has also helped clarity. So, FX have traded, from August up until for the past 6 months within a band of 1,480 to 1,600. So for me, that's stability. So that will give investor confidence. So they know I can play in this economy. So this is a predictable economy. I always say that investors don't like dark holes because when they are working with other people's funds and even their own personal funds, they have to be sure that they need to be sure that what they are going into is something that will work, and then they will be able to exit at the appropriate time with no shocks, the currency shocks that will actually affect their income. So with what we have now, so people can plan, investors can plan, so people who want to come and play in your economy.
All right, so let's look at the extent. How will the ongoing fiscal reforms influence MPC's decision this cycle? To what extent will it affect it?
Generally speaking, I always give my everybody knows that illustration that I give, that most of the time when I'm, put on the spot, to discuss this, I always say the monetary policy managers are like, in a football pitch, they are like defenders, and then the fiscal policy managers are like the strikers. So the victory of a team is more dependent on what the strikers do than what the defenders do. Because even if you defend and there are no goals, which is the monetary policy providing stability and all of that, and then if your strikers don't score, you will not have victory. So the dynamism around fiscal policy management at this time requires a very robust investment, as regards infrastructure, into the productive sector. And then when I talked about the investment coming from or strategic financing coming from the finance institutions. So those creation has to also be managed by the fiscal policy managers. So that confluence, them being able to work together has actually helped. And I know that, them supporting each other will also make it a lot easier for us to attain, the growth that we have been working towards. So I see optimism. I'm very optimistic, and I see us getting it right this time.
All right. So let's talk about the current liquidity level in the banking sector. How is this likely to affect the CBN's policy options?
So with the cash reserve ratio, so that has, like I said earlier, is a deliberate function to see how to mop up idle funds. Or I just use the word idle funds. I mean excess liquidity. You know, I wanted to just give a very simple. You know, we always say that this saying that an idle mind is the devil's workshop. So the greatest implement in that devil's workshop is idle funds.
Yeah.
So when you don't have funds that are working, the best thing is to mop it up until there are specific needs for those liquidity. So that would help. You know, like I said, if they have to gauge based on the new CR on you know, on the non-TSA deposits. You know, so if they see the effect, how he has support. Of course, from the figures we're getting, it's obvious that he has become effective. But we need to monitor a bit more to see how effective this particular policy will be. So that's something they are going to be looking at, you know, definitely as they go into this MPC meeting.
Okay, so before I let you go, what kind of direction or reassurance should stakeholders expect from the MPC to guide economic decisions and your projection heading into 2026?
Let me start from my projections. I believe that more investment into productive, you know, into the productive sector will help a whole lot. And infrastructure, you know, we have high infrastructure deficit, and then again being a bit more strategic in the communication between economic communication between the subnationals and the national, because obvious with the kind of the kind of funds going to the subnationals, so there should be a conversation between the federal government and the subnationals on their investment strategy, so that you don't sabotage what is being done at the central. So if the national government is designing policy and, you know, restructuring, and then the subnationals are not adhering based on the kind of investment that they're doing, it will be counterproductive. So it will make our work a bit more difficult. But when it comes to predictions, I said, for me, the predictions that if we do the right things, if we continue on this trajectory, there will be successes. We're going to gain a whole lot, you know, because I mean the central bank has been on the right track, very assertive with their decisions, and then it also shows their independence. And that has also, you know, boosted the confidence of investors. And again, the stability that they've brought when it comes to the foreign exchange market. Then we have to also be very careful to watch and then see again how to diversify the economy so that our foreign exchange income would also move away, you know, not to move away, not depend solely on oil. So the non-oil remittances will increase. So then again, we have to also look at insecurity in our country. So whatever it takes for the society to be secure, that will help a whole lot, because next year is a deciding year for us as a nation, owing to the fact that after, you know, that is almost an election year, whether we like it or not, because the electioneering processes starts from next year. So those right investment early next year would help, and then, you know, being very strategic in our decisions would also help us.
Investment experts and economic development expert Ogbonna Okuku, thank you so much for giving us your insights on all of this. Thank you.
All right, thanks for having me once again.